Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Let's talk a little economics here. Let's set the plate. Let's set the scene for the week ahead. Callie Bostjancic joins us. She's the chief economist at Nationwide. Callie, thanks so much for joining us here. Lay out for us kind of your view of this U.S. economy here. I've got a Federal Reserve that's cutting rates. I'm not sure how aggressive they're going to be. I got some pretty decent retail sales last week, so I think the consumer's a good place. I think the consumer's got a job if he or she wants one. What's your view of this U.S. economy right here?
Good morning, Paul. Well, the economy is quite resilient, and that's what you're seeing in the consumer spending data and the labor market data. And it's, I think it's surprising to the Federal Reserve, surprising to many investors. The strength, continued strength. It's obviously welcomed. The economic expansion can continue, and I guess gives the Fed a good problem to try to think about. How quickly they need to continue to recalibrate interest rates, as they say. Inflation was a little bit sticky, though, and that throws a little bit of a wrinkle in the plans. What they want to make sure is that, as they're recalibrating interest rates lower, they don't stop the disinflationary trend in inflation that's been in place, right? That's the reason they can cut rates. We've been, always arguing it's really the pace of employment gains that will dictate, how fast they can cut rates.
Callie, what about the uncertainty around the so-called neutral rate, the long-run equilibrium interest rate, R-star? What's your sense of sort of what the the Fed's thinking on that is as they undertake this recalibration, as you call it?
Great question, because that, is the guiding star. That's the North Star. And the problem is, as the New York Fed president, John Williams, has said many times, and he's the foremost expert in the area, as you get closer to the North Star, it gets a bit fuzzier. So you don't really know, is it 275, 2.8? Is it 3.25 on the Fed funds rate, or is it 3.5%? It's unsure at this point. So they're going to use the data as guidance to tell them, how close they're getting to neutral. But I think there's a long run neutral, and then there's a current neutral, and based on current economic data, that's where the debate, I think, is ensuring. There's some signs really that monetary policy is very restrictive. Look with the housing market, look at the auto sector. They're really being weighed down by high interest rates. Middle income households, low income households are struggling under the weight of high interest rates. But on the other hand, the retail sales continue to show a consumer that is going to carry economic growth, not just, capping off a strong third quarter, but momentum into the fourth quarter. So that really is the debate for the Fed. We think they'll continue to cut interest rates. We still have in our baseline an 25 basis point rate cut in November. We have another one in December, but both of those odds, have diminished. There is more doubt, I think, among Fed officials. Do we really need to keep cutting rates, especially since they cut rates 50 basis points in September?
Callie, how about the labor market here? We got a top line unemployment rate 4.1% or so. That seems pretty darn solid to me. But some folks tell us some of the recent trends have been a little troubling. How should we think about this U.S. labor economy?
It is an interesting picture. So on one hand, there's still pretty good demand overall for workers, and the unemployment rate reflects that, very low 4.1%. On the other hand, when you look at the jobs that are created from the establishment survey, they're very concentrated in health and education, and also leisure and hospitality. Now, that's not unusual for economic cycles. You could continue to see the economy do well with this high concentration, but it also tells you, again, that's a sign that high interest rates are hurting the cyclical sectors of the economy. So you'd much rather have a broad-based employment gains. Right now, it's really highly concentrated.
You talked just a moment ago, Kathy, just about following the data, how much of this is data-driven. We have a cacophony of Fed speakers this week. Today, 4 of them, as I count them: Mary Daly speaking, Lori Logan of the Dallas Fed, Neil Kashkari, Jeffrey Schmidt of Kansas City. What are you listening for in all of those speeches? Again, it seems like there's such monumental uncertainty just a couple of weeks away, 15 days away till this election. We might not have a result by the time the Fed meets once again. How valuable are the insights from these Fed officials, just bearing in mind that uncertainty that looms so large?
I think it's very valuable because that's the forward guidance, right? And that's one of the tools that they can offer the markets is this verbal guidance. There's 6 weeks in between meetings. So this is their time to give their thoughts. On the other hand, they're all individuals, so you're not getting a consensus view, but you can pick up, where are the doubts increasing? Like, are they leaning towards saying, you know what, we know economic data have come in stronger, but we're still really restrictive, and we think we can continue to lower rates, and we have room to do that? Or is there some concern that maybe we need to go a little slower, even slower than the markets think, because we don't want to revive inflation?
Kathy, thanks so much for joining us. Really appreciate getting a few minutes of your time. Kathy Bostjancic, she is the chief economist at Nationwide.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
My question simply is, do we trust any of the polls here? I can't remember. I don't know. Sometimes they tell us the last election they were pretty accurate as it relates to the popular vote, but I don't know. I just think back to all the other elections. I think about Brexit, how bad they were on that one. Henrietta Treyz, she does this kind of stuff for a living. She's a managing partner at Veda Partners. Henrietta, are there any polls that you look at that you feel like are maybe more representative and than others, and kind of what are they telling you these days?
Great question. Thanks. I actually really enjoy the fact that we are in the early voting process already. So now we can start to move, or at least add on to our data sets by incorporating the early voting data as opposed to just the polling. So that's informative and helpful. It's not for the faint of heart. It is worse than day trading. You get these huge baskets of data that swing the vote totals by these massive margins every single night. But nonetheless, if you're really digging into the weeds, you can start to watch early polling data, which is very exciting. And right now, effectively, what I would say is pay attention to the really great polls that are done by, tried and tested pollsters. So the New York Times swing state polls are particularly valuable. And then all the Bloomberg Morning Consult poll, which is more frequent, is very valuable. Stick to the big ones. There is a flood of polling right now that is coming from the campaigns themselves. And those tend to have pretty stark biases, 3 or 4 points in favor of whichever candidate. Right now, a number of those like Atlas, Rasmussen, Trafalgar are coming from Republican outlets. So you're going to see a Republican bent, which is what the polls are showing you right now.
Well, speaking of bias, the audience knows I bring my North Carolina bias to the show when I fill in. And here's a number that stood out to me. 1,800,123. That's the number of early votes we've seen cast in just 4 days. And this is a state of about 10.5 million people. Wow. Talk a bit about early voting. And if this seems like an outsized level of enthusiasm so far, sort of what we know just a few days in for how many people are voting early and what that says perhaps about the trajectory here going to Election Day on the 5th.
It's really exciting, and congratulations on having North Carolina on your radar. And I'm sure you have friends and family that are in the area that you're getting feedback from in real time and anecdotal stuff. North Carolina and Georgia are breaking records for turnout. I would say probably the main takeaway for me right now is that Republican voters are voting early in much greater frequency than they have in the past, and about double the rate of Democrats. So that's the case in Nevada, for example, which I was just spending some time with this morning. And effectively what's happening is Republican voters have been, very exposed to this idea of a election that may be stolen and what have you. The Republican governors in those states and Republican operatives like North Carolina, Georgia, and Nevada have been spending millions of dollars trying to encourage their voters to come to the polls early. And that is really panning out. So you're seeing these substantial increases in Republican voters who usually vote on Election Day coming to vote early. And that's, I think, a main driver of that record turnout number.
Henrietta, what do we know about, the down ballot situation for some of these key states, key seats? What are we hearing, and how do you expect that to play out?
Down ballot's really still moving very substantially for the entire year, as we've discussed in the past. Democratic candidates in the Senate seats like Ohio, Pennsylvania, Nevada, Arizona, Michigan, Wisconsin, et cetera, they've all been leading the top of the Democratic ticket, whether that's Kamala Harris or Joe Biden. Throughout the year, they've been polling ahead 5, 6, 10 points. As the final voters decide which direction they're going to go, the delta between Democratic senators and Republican Senate candidates has dropped substantially. And now voters are going to the direction that they have since 2016, which is they're going to vote party line down the ballot. So what we're starting to see is material tightness for the Democratic candidates in Pennsylvania. We're starting to see that tighten up in a state like Arizona and Nevada, where the Democrat is still comfortably ahead, but the Republican or challenger is starting to move a little bit further up in the polls as voters decide which direction they're going to go at the top of the ticket, Kamala Harris or Donald Trump. So we're seeing that the races are really tight. My expectation with 90% odds is that Republicans are going to control the Senate next year. And that's mostly a virtue and a factor of Montana. In Montana, Donald Trump is on track to win by 21 points. And that's a bridge too far for any Democratic incumbent to supersede. Usually a down ballot senator can outrun the top of the ticket by about 4 or 5 points. But for Jon Tester, the senator from Montana, he's underwater now already against his Republican challenger. And then he's underwater by about 15 to 17 points against Donald Trump at the Republican top of the ticket versus the Democratic ticket. So my expectation, almost regardless of how the swing states go, is that Republicans will control the Senate next year.
Henrietta, let's talk a bit about Elon Musk. He spent his college days in Pennsylvania. He's back in the state, spending a lot of money. And the thing that's getting a lot of attention this morning is his, it's almost like a sweepstakes. If you sign his pledge here to support the First Amendment and the Second Amendment, you're in the running to win $1 million a day. My eyebrow is raised as a result of seeing that, wondering if that's legal. I gather there's some interest on the Democratic side in getting law enforcement to look into what he's pledging to do there. Talk a bit about that scheme, if you would, what you make of it, but then more broadly, sort of how he's changing or trying to change the ground game in Pennsylvania.
Yeah, a couple of really good points here. First, it's illegal to buy votes. And so what Elon Musk is doing is he's buying signatures. He's trying to get you to sign up to support the First and Second Amendment. He's also trying to get you to sign up to register to vote. That is a technicality that is different than actually buying your vote on election day. So he's circumventing that part of election law. Democrats are, of course, screaming about it because it's designed with a monetary value behind it and it's about voting. So they're trying to get the Elections Commission involved. But that is the way that he is sidestepping that issue. I think you're seeing as a general strategy from the Republican camp, from Donald Trump, is to farm out a lot of the campaign to third parties. So whether that's, trying to have a third party boots on the ground program that will get you volunteers and door knockers in an individual state, or in the case of Elon Musk here, with trying to buy signatures to get registered to vote, or in the case of even the predictive markets. You've seen that on Polymarket, for example, with this sharp uptick from an estimated 4 accounts, driving the odds up to 61% as of this morning that Trump will win. This is all sort of third party designed to influence voter perception in the final days of the campaign. And you still have about 24% of the individual voter base who's undecided about which direction they want to go. What they're trying to do is influence the idea of where momentum is, because voters like to vote for the winner. So they're trying to give this projection and this image of winning. And I think that's a big part of what the Elon Musk campaign is all about.
So Elon Musk for former President Trump, maybe a Mark Cuban for Vice President Harris. Do these types of celebrity supporters, do they mean anything at the end of the day?
I think what Republicans are trying to do specifically is turn out very keyed in media attentive audiences in the young male demographic. So for this cohort, it very much could take hold. That unfortunately has yet to be proven. I mentioned earlier that a lot of the voters who are coming out for the Republican Party right now used to vote on election day, and now they're voting early. What's happening is you're actually not seeing new voter turnout. You're cannibalizing your election day vote. So there's a big to-do about a blue wall going into election day that's overwhelmed by a red wave on election day. That was the trajectory we saw in 2020. Donald Trump has talked a lot about that in the past, sort of this Democratic blue firewall. What Republicans are trying to do with this media strategy and this outreach to young, very online male voters is get them to come out and vote for Donald Trump. What we're seeing so far is that very enthusiastic repeat Republican voters, Trump supporters, are very galvanized this year. They're extraordinarily enthusiastic about voting for Trump, and they're turning out early. So it's not that we're seeing a new influx of voters thus far. There has been strong voter registration from Republicans in the last 4 years, but that's not what we're seeing in the early returns thus far. Again, as I said in the beginning, this data swings a lot, but right now it's all election day voters that are pulling forward, not new voters coming into the Republican fold.
All right, Henrietta Treyz, nobody better.
Always
I'll tell
great
you that.
to speak with you.
I mean, always good on that one. Henrietta Treyz, thank you so much again for your time. Henrietta is a managing partner at Veda Partners, giving us the latest breakdown of a fluid situation. Again, 15 days away from Election Day.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I'm sandwiched between two Carolina people. David Gurr, who grew up in North Carolina, Chapel Hill, and at Chapel Hill, she's also the chief market strategist at Ritholtz Wealth Management. So, Callie, I mean, I've got a stock market. I'm not jumping off yet. I mean, should I be jumping off here? I'm sticking with it.
Well, the economy looks okay, so I don't think you should be jumping off.
Okay.
And better yet, expectations are so low that I think it could lead to more of a rally in the future. I mean, of course, everybody's nervous about the election coming up, and we're seeing some premium in the VIX and in the 10-year because of that. But at the same time, I mean, post-election rallies are quite typical. We're heading into an earnings season where estimates have been cut way too much, and up until a few weeks ago, everybody thought we were heading for a recession, and it turns out maybe we're not. So it's all about expectations.
Early days yet in this earnings season. I guess 113 companies reporting this week. What have you been able to divine from what we've gotten thus far from the financials and others, and sort of what are you looking for as we get kind of more fully underway in the reporting period?
Well, obviously, earning estimates were way too low. On the revenue side, on the earnings side as well, that's why you're seeing about an 80% beat rate, and why you're seeing stocks react really well when companies come out with these not impressive results, but at least they kind of hurdle the low bar. I really like the management commentary that we've heard so far. I feel encouraged by the bank commentary around the economy, around the consumer that we've heard. I'm more macro, so I don't look as much at individual companies, but so far, so good. I mean, that beat rate is strong.
Valuation. What are the concerns, if any, here for you for valuation for this market?
Yeah, well, I think valuation is a distraction for people. So obviously the S&P valuation is quite high, but when you take out tech, the S&P sits around like a 19 forward PE, and that's actually quite low. I mean, if you think about it, the average for that is around 17 historically. So what I'm trying to say is that there are a lot of opportunities in this market if you're willing to look for them. Valuation isn't a concern for most stocks. You just have that influence from big tech, just kind of clouding the valuation picture that you're seeing for the overall S&P.
So if I'm looking for them, where would you guide me, or where would you recommend that I go? Maybe kind of unloved places that might be overlooked.
Well, we've been talking about the S&P. I'm going to look outside the S&P
Please.
now.
Okay.
I think you have to look at small and mid caps, especially if we think the economy can survive these high interest rates. I mean, small caps were a rate story, but they need a strong or even an okay economy to really thrive in this environment. I mean, normally we see small caps outperform in the first legs of a bull market. We haven't seen it this time around. It's because the Fed has been restricting the bull, kind of depriving it of oxygen through higher interest rates. So small caps, mid caps, I think rate sensitive sectors are dealing with the same fate right now. I think cyclicals look interesting, but I'm not as excited to jump into them because we've only seen 1 month of relatively okay jobs data.
Sectors. Are there sectors that screen well for you guys these days?
Well, we like looking at value over at Ritholtz. I mean, you have to remember long-term clients, trying to get them from point A to point B. I think value in general is really interesting right now. I think we see some value in real estate, in consumer staples, again, in those rate-sensitive sectors. See a lot of value in small caps, like I mentioned to David. I mean, overall, just look at the unloved sectors in this bull market. What hasn't performed well, rotate there.
I'm very curious asking everybody about this, just sort of how the role of the Fed is sort of dovetailing with what you're doing. And so it just strikes me as you kind of look ahead to the election and beyond, this kind of monumental uncertainty. How do you see around that? How does the Fed see around that? Again, I bring this up over and over again today, but it's like, how many Fed speakers are speaking? I remember we heard from Austin Goolsbee a couple of weeks ago saying he loves getting all of those perspectives. He thinks it's valuable. How are you able to sort of divine any sort of sense of direction from what all these folks are saying? And what is it telling you if you are able to?
Well, our clients are lucky. They have me. I'm the one that's stressing out over these headlines.
You have to figure it out. Yeah.
And trying to put all the tea leaves together, but ultimately reminding people that these headlines, these Fed speakers, probably won't push you off of your financial goals. Of course, the Fed and what the Fed does is important, but what you're hearing from Goolsbee, and no offense to Goolsbee, I love Goolsbee, but what you're hearing from these Fed speakers ultimately is noise. Of course, Fed policy is important, but right now it looks like the Fed is cutting rates gradually. I think they have an argument to cut to neutral at the moment, especially if we see job market data, kind of addling along like we've seen for the past few months outside of September. And, a gradual cutting is a really good background for the stock market, but it also means that you probably need to lock in rates and prepare for a potential crisis. Take advantage of where we are now.
Callie, I know you mentioned Ritholtz Wealth Management. You guys think longer term? We've certainly heard that from Barry Ritholtz himself. How do you guys think about stocks versus bonds, maybe even alternatives for a typical Ritholtz Wealth Management client?
Well, we offer, I think, 6 or 7 different portfolios, different stock and bond allocations. That ultimately matters most for the client and their personal situation. Again, right now with bonds, we're telling clients to think about locking in rates. We don't think they'll stay here for very long. On the stock market, we think you need to be invested in riskier assets to reach certain financial goals. And, depending on where you are, if you're an accumulator, if you're, pulling more income from your portfolio, that's going to change the allocation you're looking at. But right now, we still think the stock market is quite attractive. We always remind people it's expensive to miss a bull market. So, the risk of sitting out most of the time is bigger than the risk of potentially buying at a top. Just make sure that you have that cushion in your portfolio, because we all have emotions. We're all human. We need a little bit of that protection if we do see a bigger sell-off.
Could you give us some insight into those conversations? Because as you say, it's costly to miss out, but you look at how much money is sitting on the sidelines. You're trillions of dollars on the sidelines, and so much in money market funds, so much in bonds. How do you compel people, or what are the conversations like as you're trying to convince people that there is still opportunity in a moment to get into equities?
Well, there's a lot of talk around big tech. That was more of the talk in the first half of the year. Why are so few stocks driving this market higher? Obviously we have an eye toward value, so that was a harder conversation to have with clients. But ultimately, we reminded them that, over time, there's this area of stasis, and the market tends to go there. You just have to, kind of wait it out and be prepared for a bunch of different scenarios. And that actually worked out really well over the past few months. And we're seeing, as the Fed has cut rates, we're seeing more money, of course, go to those value-oriented stocks. But on the whole, I agree with you. There's still a lot of cash on the sidelines. I don't think it's a positive catalyst in the next 3 to 6 months. I think there's a lot of inertia there, but that's something to consider. This bull market has grown on doubt and skepticism, and believe it or not, that's a healthy environment for higher prices.
I'm sure your clients are calling up all the time, asking about the election and what they should do. What do you try to tell them?
Well, politics don't matter for your portfolio.
Okay.
Bar none. There are a few caveats there. I think they matter for your financial situation, especially with the Tax Cuts and Jobs Act. Certain provisions there expiring at the end of 2025. So that's mostly what we've been talking to clients about. You need to plan now for any changes that could happen in the next, several months. But on the whole, we remind our clients who are more long-term that, it's one person can't control the $57 trillion stock market. Maybe Jay Powell, but I'm not even gonna go there for him. Trying to buy or sell stocks, depending on who's taking office, is usually a fool's errand.
Can we get a little anecdotal sense from you, a North Carolinian like myself, for what this election, what this part of the campaign cycle has been like? How inundated are you just as a citizen of that state, and sort of what is the electoral atmosphere like?
I mean,
in
even
North Carolina
better.
right now?
I'm a resident of Mecklenburg County, which is one of the most important counties in North Carolina. I mean, there's a lot of noise, a lot of signs. I mean, obviously a lot of conversation. I can't really get into, I'm not a pollster, right? I'm watching the polls nervously like everybody else. But just know that people are paying attention. And I think that there's a lot of energy around both sides.
Callie, thanks so much for joining us. Always great to see you. Callie Cox, Chief Market Strategist for Ritholtz Wealth Management.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
All right, folks, your daily look at the front pages around the world. Lisa Mateo, newspapers, what do you got for us today?
All right, you were just talking about elections, so I want to get to this reality for the election workers, what they're living in. This is Arizona, Maricopa County. It's one of the most populous counties in Arizona. They're reporting that some of the workers, you have buildings that have been added metal detectors, armed guards, but there's also police snipers, drone patrols will be on hand. This is for election day. Election workers going through active shooter drills. So this is like a whole new reality. A lot of these workers are living through, a lot of them volunteers too, on top of it. So a lot of them are saying some are scared to come in. But why this area of Arizona? Well, it's sparked by years. Donald Trump's false claims 2020 election was stolen. So he has told his supporters it could happen again. So now you have this whole entire security going on now in order to protect a lot of these workers. It's a new reality.
In Colorado, death threats from election deniers have led some county clerks and election officials to have bulletproof vests on hand. So you got that.
Yeah, so it's not just Arizona. It's nationwide. I mean, they're stockpiling Narcan because if you remember, they received ballot envelopes last year that has the white powder with the traces of fentanyl in it. So just a big, overall look at the security
Wild to
that's
think
needed.
about, will this continue? Obviously, we saw what happened last time, and that's what's informed this time. But as you mentioned, so many people doing this on a voluntary basis or taking these jobs part-time.
Right.
One wonders if the hassle of doing this and the fears associated with doing it are going to keep people from signing up in the future.
Right. The hanging Chad seems so quaint now, doesn't it?
Yes.
The hanging Chad. What else you got?
Okay, so Business Insider spoke with labor experts. They're looking to see, because it's this whole battle back and forth, is the college degree still a top priority for employers? So Business Insider, they spoke with a couple of them. They say that employers, they might no longer require a degree for certain roles, but those doing the hiring still care whether an applicant has one. So there's been different types of research that has been done. Some consulting firms say that it shows hiring for skills is 5 times more predictive of how someone performs on a job than hiring based on just education. But they also say that those hired based on their skills rather than education tend to stay with an employer longer. I don't know if it's that whole thing of just, being happy that you've kind of been brought onto this company because you don't have the degree. But those are just some of the things that they're saying, whether this degree is still
I've told you this before. I drive up and down the Jersey Shore. Forget about the big monster houses on the beach. That's all the Wall Street folks, the tech, whoever those people are.
Sure.
How about everybody on the Bay side? They're $2 million homes. There's tens of thousands of them just on the Jersey Shore. Forget about the rest of the world. And they each have a $500,000 boat moored in the back. Who are those people? Where did they come from? And what I think they are is, as I drive around, I think they're just small business owners. And they've just created this wealth, and that's it. I mean, and there's gajillions of them out there.
Yeah.
And I think a lot of them are going to be, in these coming generations,
don't have degrees, but
from the trades.
Yeah, very
and they don't
yeah.
have any college debt or any of that kind of stuff. You just wonder where all that wealth comes from, and it's just small business, I think, in this country.
And then we just had that story not too long ago that a lot of private equity pouring money into the trades, like buying out a lot of these HVAC and plumbers and all that, who are now becoming millionaires.
There you go.
So there you go.
All right, this next article is not what I was expecting.
Yeah, okay.
The sandwich generation.
The sandwich generation. Okay. I hadn't heard that term before, so maybe I'm out of the loop. I don't know, but those are stuck between caring for their older parents and they have younger kids. And I'm talking younger because a lot of these people, these are millennials who are now reaching that midlife who had kids later in life, so now they have newborns, but yet they have parents who are 80 plus.
They need care.
Who need care. So now it's this whole struggle of, can they afford 1, daycare, and then 2, to pay for these aging parents who may not have prepared for staying alive this much longer.
And the
it's
elder
a struggle.
care is
The elder
so
care.
expensive. Yeah.
Oh my
Yeah.
God.
So it's 11 million people in this boat in this country, which is a sizable chunk.
Right.
That's crazy.
Yeah.
It is. So, and then it's taking away from their retirement because they're putting all their money into,
Right.
the daycare and the elder care.
Right. And then and some of them that have to leave the workforce because they have to take care of both parts of this sandwich, if you will.
Right.
So
And they're saying that's a problem because most of those people are women. They're saying that's a massive risk for the economy if a lot of women start to.
And staffing's still a huge issue too, just because you can't get people to do this kind of work. So I think a lot of people are doing it by default. They want to get care for their aging parents, and they can't do it just because there aren't enough people doing those jobs.
That's true. Now, I know you're happy about the New York Liberty,
I am.
right? Basking in their title. You had the sweatshirt on Friday,
Yes.
okay? But the league actually set to lose millions this season. Investors are growing impatient. This was in the New York Post. It was exclusive with them. They're saying the NBA, I didn't realize this, owns nearly 60% of the WNBA. So sources are telling the Post that NBA team owners, they've invested hundreds of millions of dollars in the WNBA since they formed. But NBA executives are saying that the WNBA will lose $40 million. But they're saying that, starting in 2026, they'll get that $2.2 billion over 11 years to part of this new basketball media contract,
deals, yeah.
right? So they have the new media deals, but still then they have the contracts are up. So now players are going to be starting to get paid more, as should. But that's another side of it to think of. But I didn't realize there was so much behind it. It's kind of confusing to me a little bit.
Just the way that it's structured. Yeah, and there are very few teams, I think, where they're kind of single-owned, but the Liberty are. I think that it's owned by one family now. But it is kind of jarring to kind of look at the crowds they were able to pull for the semifinals and the finals, especially, filling up. Not completely, but most of the Barclays Center last night, and the same out at the Target Center in Minneapolis. It looks like there's momentum here, but it's still a financial challenge for a lot of these teams.
It all comes down to the broadcasting rights.
Yes.
So if I were
advising
the teams, I would not sign a long-term deal. I would sign a short-term deal.
And why is that?
Because their rights are going up in value so dramatically that why lock yourself into a value today for 11 years when I think I can come back in 3 years or 5 years and negotiate a much higher rate. So I would go short term. I think they're making a mistake to lock in these higher rates. But I can see the incentive because that's a big jump from where they are now. But again, as you mentioned, the players are going to want to get theirs.
And they're expanding. I think they're going to have 3 new teams in the next season as well, and they're going to prolong the finals. They're going to do a 7-game series next year. So they're playing this optimistically.
Yeah,
they're
in a great spot. I think, again, the value for most of professional sports is in the media rights. That accounts for the vast majority of the value of these teams. I don't care if you're English Premier Soccer or the NFL, it's the media rights. And so you really have to focus on them. Now they're getting a nice big jump here, but
they are.
I think you've got the leverage to maybe do a little bit more. So, all right, Lisa Mateo, thank you so much. That is our newspaper segment backed by popular demand.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.